Hi and welcome to the Market Rag for Wednesday, January 2nd, 2008. Well, looks like the market woke up on the wrong side of the bed this year. You can see we were down about 1.5% across the board, with the Dow taking it a little bit more on the chin. That's roughly over 200 Dow points we were down. And coming over to the commodities, you can see huge moves. Oil was up over 3.5%, with gold up almost 3%. Big moves here in the commodity area. As we look at the broad market index here on the sentiment grid, you can see again dropping into the lower part of these ranges here in the short term. We're still in the middle and basically still flat on the big ones, with the Nasdaq still kind of holding its longer term uptrend. The commodities all high, all up in uptrends. Everything's hot here. Gold and bond have given extreme high signals, so a pullback in these two groups wouldn't come as a shock right now. Coming over to a chart of the S&P, you can see the big down day we had. I said we were at a coin toss yesterday with a slight favor to the downside, and well, it looks like that's what won. We'll really be watching this previous low here to see how the market acts when it gets down to that area. The Dow actually broke its previous low today on its down move, and again you can see the first time we've had volume in the market for a while, but don't trust it too much till next week. Here's oil, and you can see we've now broken this previous high, which was the all-time high for oil. Again, be a little cautious here because we do have an extreme high signal on this, but it's common for these to kick in during breakouts as well. So gold in a very similar situation. It took out the previous high and broke into an all-time high for gold. Again, running pretty hot, so be cautious. I'd wait for that to calm down before looking for an entry point. Bonds had a nice move, breaking above these two prior highs in one fell swoop. We'll just see if it can keep the action above these levels or if it drops back down. Coming over here to the sector sentiment grid, first off we can see our best area lately is energy. We've got a nice uptrend in the longer term picture and sentiment's really good across the board. Some of the other uptrends here like technology, consumer staples, and utility, as you can see, have lost a lot of favor here in the short term. That's a little disheartening. On the downside, it's the same old song and dance. You have consumer discretionary, financials, semis, and transports. Semis took the biggest hit of all of them today, and everything else is just basically floating around in the middle. With industrials, kind of interesting, they're flat on their longer term trend, but you can see losing a lot of sentiment here in the short time frame. Here's your transports breaking into a new low today. And the big one was the semiconductors. You'll notice we broke down through this previous low here with today's action. The next point we're going to watch is this prior low that happened right before December of last year. Here's a chart of energy, and you can see after clearing resistance it stayed up there pretty good. It's been staying above that point and remained strong. The industrials went through this prior low today but didn't end up closing down there. We had this nice breakout on the consumer staples area. Nice little pullback down, checking that old resistance, and remember that should become support. But it ran up and failed to make this new high, and as you can see we're now back down under that resistance line. And the consumer discretionary making a brand new low for the year. Taking a look at the portfolio, we weren't filled on anything today. We still have that about half our money out in the shorts. What's kind of a little disheartening is we weren't up a lot of money today given the fact the market was down so much. So I've gone in and shaved some of the risk out. I left a little out there due to the charts and how they formed, but I tried to shave as much off as possible. Would like to see this closing R get a little better, telling us we're in the right direction. And remember, I'm going to go ahead and keep my market rating at a 0 until we can get through this week. Got just a couple orders out there for a few of these energy stocks just in case oil wants to keep on the run. You guys enjoy your evening.